This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on May 13th, 2011, at approximately 8:39 in the morning Mountain Time. That's 10:39 Eastern Time. Our show runs on 630 CHED in Edmonton, AM 640 in Toronto. If you ever miss a radio show, you can catch us archived at Harold's website, HESradio.com, HESradio.com. For those that are listening in Edmonton, we will be on early next week. Next week, on at noon, prior to NHL Conference Final Hockey. So we're normally on at 3 o'clock in the afternoon on Sunday. We will be on at noon next week. Harold, it was an interesting week in the financial markets, in particular precious metals. Gold hanging in there right at $1,500, and we're continuing to see a little volatility in silver, which is to be expected. But overall, it was a positive week.
Yes, I agree with you, Randy. It was a positive week because, again, the market could have broken down further. But there's a lot of confusion in the market, and what we want to do today is help you with that confusion. And basically, all we have to do is really go back to basics and look at the markets, because really nothing has changed fundamentally in the market at all. You know, we're in a time when short-term trading can be affected by these computer trading programs. And that's what these hedge funds do. They tend to trade on computerized programs. So, you know, the fact is that when the markets sell off like they did over the last week and a half, it has really nothing to do with the fundamentals of the market. It has everything to do with posturing in the market. And again, what I believe happened over the last 2 weeks was not what they're trying to feed us. What they're trying to feed us is that the market in silver was too speculative, and basically they wanted to chase out the small investors by raising the margin requirements in silver. Well, they didn't do that in gold, and gold was fairly volatile also. They certainly didn't do it immediately in oil, and oil has been extremely volatile. Now they're coming out and saying that they're going to raise the margin requirements in oil also. But the bottom line is that I don't believe that was the reason that the silver market fell off, and I don't believe that, you know, the fact is that they raised the margin requirements to curb speculation. What I believe happened is that because of the tremendous run in silver and the tremendous notoriety that's going on in the markets, I believe that they oversold the market. I believe that they sold so much silver in ETFs, in physicals, in futures, in options, and Forex, in all those areas, and most of those, aside from physical, are all paper assets and silver, that they just sold more silver than exists in the world. And basically by doing so, the COMEX is in a position that they cannot deliver against outstanding futures contracts. And that's why I believe that they brought down the price of silver, because primarily the silver market is still extremely strong. Now, as we're taping the show on Friday, this has been a very volatile week, but gold is still above $1,500. In actual fact, gold is up $3 on the day, trading at $1,510, and silver, which was negative this morning, is now up $1.10 on the day, and we're trading right at around the $36 level. In fact, what I believe is happening at this point is that we're building a very strong base in silver again. We're building a base at about $35. Last year, we built the base at about $28. So basically, every year, the base for silver is moving higher and higher. And I don't have a problem with the pullback. The fact is that these markets moved up too much too quickly anyways. And again, a pullback in the market is healthy because there's a lot of people that want to buy into the silver market, but we're nervous doing it at around the $50 level. So again, to see a pullback to around 33, and then we saw the market go back up to $39 this week, and then pull back to around the $33, $34 level. Again, that is not a ridiculous thing for silver to do. The fact is that people are posturing for a position right now. The people that were in the futures markets and in the Forex markets, which are very, very heavily leveraged markets. And again, if the markets tend to go against you in Forex, which in Forex you could actually leverage up to 100 to 1. In the futures market, you can leverage close to 30 to 1. And those are very, very dangerous leverage numbers. We've said almost every single week that we've been on this radio show for the last 10 years not to heavily leverage your silver positions, because again, it's great when the market's going your way and working for you, but when the market goes against you, it could take your money away very quickly. All we want to do is be in the physical silver market. Again, silver, when we first started doing the radio show, was at $4. it's reached as high as 50. If you stayed in the market from 4 to 50, you've seen tremendous profits in your position. But if you buy in and out of the marketplace, trying to catch the peaks and the valleys type of thing, you're going to end up losing your money. There were days where the market went up $2-3 in a day, and you don't want to miss those days. So basically, to take the guessing out of the market, you want to be in the physical silver market. And basically, we're very bullish on silver. We think that silver is going to attempt to break the $50 level again this year, which was all-time high price for silver and a psychological barrier that market has to break. But once we break $50 silver, we're going to see a massive increase in the price of silver. I believe that we could still end the year, if we break 50, at 55 or 60, possibly even as high as $65. So this pullback in the market was a godsend and gave us an opportunity to buy some low-price silver that most people never thought that we would hit again. So to be able to buy silver around the $35, $36 level with all the same fundamentals in the market makes an awful lot of sense to me. I wouldn't get caught up in the emotional trading of this market, because when you start to get emotional over trading, you're going to make mistakes. The fact is that we want to be logical about this, and the logics tell us that we want to be in the silver market, because in all reality, what has changed except the price of silver dropped from $50 to $35 or $33 in a very thin market that most people feel was instigated by the government. Again, you cannot change the long-term trend of a market. You could change it short term by intervening like the government does from time to time. We saw it in 2008 in silver, in gold, in oil, and in stocks. The stock market actually dropped on its own from 14,000 down to 6,500, but the price of silver actually dropped from $20 to $9, and that was at a time when there was articles being written that you can't get physical silver, that 100-ounce bars of silvers were non-existent, and those that had any were selling them on eBay at gigantic profits. So again, what we feel is happening at this point is that we got to pull back. We're going to take advantage of that because every fundamental in the gold and silver market has remained the same. In fact, it's getting stronger as we speak. You're looking at the U.S. Fed policy for money creation. What they're basically doing is that the Federal Reserve is producing all this money, but they're keeping interest rates at zero. So when you overproduce a commodity like the U.S. dollar, like oil, like grains, like cotton, like anything, the prices are going to go down when you overproduce. The other thing is that by keeping interest rates at zero, that's a double whammy. They're producing all this money, but on top of that, they're keeping interest rates low, and that information alone should make you buy silver and gold. Because the fact is, the lower the U.S. dollar goes, the higher and higher gold and silver will go. So as long as that situation is intact, which it is, the fact is that you should want to own gold and silver for that reason alone. On top of that, there's a $14 trillion deficit within the United States government budget. The fact is they're going to have to now go back to Congress, and they're going to ask for another $2 to $3 trillion. Now, the fact is, if that $2 to $3 trillion was actually going to work towards solving the problems, it would make sense to do so. But the fact is there is no game plan, and all they're doing is throwing good money after bad, and that makes absolutely no sense. So the fact is that by creating all this additional money and everything else that's going on with gigantic spending, is just going to continue to weaken and weaken the dollar. On top of that, the United States is not the only country in trouble. The fact is that in the sovereign debt situation in Europe just keeps getting worse and worse and worse. What we are seeing, though, is a very unusual situation. Except for this week, the euro has been rallying very strong. It broke through a very key resistance level of 140, and it rallied all the way up to 150 until it met major resistance, then pulled back this week. But basically, when the euro is stronger than the U.S. dollar, you know that there's a problem. So again, that's another reason that you want to own gold and silver. On top of that, we're looking that the oil market is extreme. There's a lot of problems with oil at this point here. And again, where I do believe that they artificially brought down the price of oil this week, I do believe we're still going to see 120 to 130 in the oil market this year, and that's extremely inflationary, which is, again, another reason why you want to own gold and silver. And it's not only in the United States. This is worldwide. In fact, in the United States, the oil prices are probably the lowest, where we're right at $4 a gallon for gasoline. In fact, it's higher in Canada, and it's way higher, probably double that in parts of Europe. So on top of that, you've got the sovereign debt situations, which could really affect the euro in a gigantic way. In fact, in a couple of years from now, the euro may not even be here anymore. And even more surprising, the same situation is possible for the United States dollar. Because where oil was always traded in U.S. dollars, now you've got China and Russia trading with each other in their own currencies. So again, you're going to see a massive decline in the U.S. dollar continuing that I believe will bring the U.S. dollar all the way down to 50 cents, which is another major reason why you want to own it. The other thing is, when the market pulls back as much as it did, don't think that countries like China, Russia, and India aren't going out and buying all the silver that they can get their hands on at this point. The only ones that are not buying silver, number one, the general public still is not in the marketplace in most cases, and number two, the fact is that Wall Street is not on board. All Wall Street would have had to have done to gain any type of credibility whatsoever was say with the uncertainty in the world financial markets, precious metals, gold and silver, are a great insurance policy against horrible things happening in the financial markets. But no, they continue to beat it up, and they continue to dissuade their clients and investors from investing in gold and silver, which is only hurting their own clients because, again, these markets have not hit record prices for absolutely no reason. So again, at this particular point, again, as confusing as these last couple of weeks have seemed to be, the fact is that nothing has changed in the market. Technically, nothing changed. The market came down to its 200-day moving averages. We haven't heard anything. The only thing is that we're going into the summer months, and during the summer months, the markets tend to slow down. A lot of people in Europe go on month and 2 month vacations. The markets are thinly traded. A lot of the traders are gone for short weeks type of thing, and the markets always tend to trade in a range during the summer. Let's take advantage of that, because once we get into the fall and winter, these markets are going to take off again, and basically we will not have an opportunity, in my opinion, to buy silver at these levels again. I think that we're going to break $50 fairly easy on the next time, just like we did when gold broke $850, and then the market's going to take off and run like you've never seen before. My strongest recommendations at this point are to be out of paper assets. The fact is that you saw what happened with paper gold and silver. The same thing is going to happen with paper stocks and bonds. You don't want to have all your money in those markets. You definitely want to have insurance against these horrific financial situations that are happening worldwide. And basically the best way to do that is with hard assets, gold, silver, diamonds. Just go back in history and see what these three markets have done during these type of times in the past, and you'll be convinced, as I am, that that's where you need to put your money. To put your money in physical gold and silver, gold is at record prices. It's above $1,500. Silver almost broke the all-time high of 50, and I believe we'll break that by September, October, and diamonds are just on fire, and that's primarily because people want assets that they can hold in their hand, that are tangible, that are not paper, and basically have value to them. And that's what gold, silver, and diamonds do for you in these tremendous times of unbelievable uncertainty.
To invest in precious metals, the telephone number 1-866-623-2002. 1-866-623-2002. There's only one company that Harold recommends. That is Worldwide Precious Metals, a Canadian company out of Vancouver. That is the only company he recommends that you deal with. The website, wwpmc.com, wwpmc.com. The telephone number, 1-866-623-2002. Speak with them about investing in precious metals, and also speak to them about receiving our free weekly newsletter. I can't stress enough how important it is to keep up to date on a weekly basis by listening to our radio show on 630 CHED in Edmonton, AM 640 in Toronto, also on the internet at hersradio.com. Their shows are archived there. Also get our free weekly newsletter. We do it in a way that you can go through it in 10, 15 minutes. If you want to delve further, you can. You can spend hours if you want, but financially educate yourself as to what is going on in the world today to protect the money that you have and obviously profit at the same time. And it's interesting. Some of the top people in investing today are saying we are in unprecedented times when it comes to not only the world, but investing. It is absolutely crazy. Interesting quote I found this week. It's in the newsletter from Nelson Bunker Hunt. just about anything you buy rather than paper is better. Your